Wrapping up a solid week for real estate, seeing gains in both housing starts, existing home sales. The home building index also hitting a 10-year high. But for those not ready to go ahead first into housing, my next guest is offering an interesting alternative. Joining us right now is Realty Shares founder and CEO Nav Athwal. Nav, good to see you.
Hey, Maria.
Thanks so much for joining us. I like the idea of investing in real estate, but you don't have the maintenance of the house. Explain how that's done in crowdfunding.
Yeah, crowdfunding is passive real estate investing. You're investing in a share in a property, you're pooling money with other like-minded investors, and you're getting an income stream. So it's like investing in a stock. You're not running the company, but you are earning the benefits of the company's upside.
Because you're getting dividends.
Exactly. You're getting dividends from rental income, and if the property appreciates over time, you're also sharing in that upside when it's eventually sold.
How's real estate doing right now?
Real estate's doing prettle well. We saw the Case-Shiller index month over month, 0.72% increase. We saw 4.7% increase in housing sales. You're seeing a median home price of $221,000, 6.1% increase over last year. So real estate is doing well despite a volatile stock market, and it's heavily correlated with inflation. So if we do see rising interest rates, it's going to continue to do well.
So real estate has finally been picking up a little bit after many tough years. One question, do you have to be an accredited investor, or can anyone invest in what you're talking about?
So today, unfortunately, you do have to be accredited due to
Which means $1 million liquid?
$1 million net worth, excluding your personal residence, or an income of $200,000 or more a year. But we are very bullish on that changing over the next year, 18 months, and we would love to open the platform to anybody, because at the end of the day, real estate is one of the best ways to build wealth, and it should be shared by anybody, not just accredited investors.
What about just buying a publicly traded REIT or a real estate fund, incredibly liquid, which is one of the big benefits?
Well, it's a benefit. It could be a detriment as well, because if it's just a publicly traded security, you're also more correlated with the S&P. So if the stock market is experiencing volatility, so are public REITs. Public REITs and real estate actually are complementary investments. They're not mutually exclusive. If you look at a portfolio of REITs, real estate, stocks, and bonds, that outperforms a portfolio with just REITs or just real estate.
But what's about your lockup, though? Speaking to the liquidity issue.
Can't get in and out.
You can't get in and out. We have investments that range from 6 months up to 5 or 7 years. We have a lot of investors using their retirement account, so they like to be locked up for a longer period of time. One of the goals we have in the future is to create a secondary market. We can provide some liquidity, but today you are locked up for the duration, and I think it could be a good thing to be locked up for the duration when people are pulling out because of what's happening in China, because of rising interest rates, because of the Greek debt crisis. So.
All right, we'll be watching that. Nav, good to have you on the show today.
Thank you so much.
Thank you so much. Nav Athwal joining us there.